Hey, what is up, guys? Hope y'all are doing good. I'm doing well. In this video, from the topic of the video, as you have seen, this video is about margin investing. In this video, I'll show you guys what am I using my margin for and how you can use it to make some extra money on the side. So if you look at this portfolio, this Robinhood public portfolio that I've been sharing with you all on this platform has close to 220,000 US dollars. In this account, I'm using margin. So margin is basically the money that you borrow or you get as a loan from your and from the company that you are using as a brokerage. So in this case, it is Robinhood. Margin can also be uh, gathered or collected from Vanguard and Fidelity, all the other big organizations or brokerages that hold your assets of stocks or cash provide an option for you to have a margin account. The difference between a margin and a cash account is that cash account is solely based on the money that you put in, and that is kept as a cash in your account. Whereas with margin enabled account, what happens is you can borrow or get a loan on the cash that you hold. So say for example in this account I have roughly $220,000 worth of assets that includes ETFs and stocks. So I can borrow or take a margin of $220,000 roughly. So here what you see here is I have individual cash of roughly $30,000 and my margin total is $114,000. I'm using $105,000 as options collateral. So I have a buffer of $64,000, which is how I'm gonna avoid a margin call. More details on margin call is in the description. I will link a video in which I've explained all the terminologies that we have in terms of margin and specifically using margin on Robinhood portfolio. So now talking about the strategy that I am using to generate some passive income with this margin is that this margin, I am selling cash secured puts with this margin. What that means is I can borrow this money and use it and try to sell options. And if those options do not get assigned, then I'm gonna collect the premium and I won't be paying any interest on the money that I borrowed. So I'll give you an example. So SOXL is one of the ETF that I sell cash secured puts on. And what I do with this is under this SOXL stock. So say for example, this is a stock. I would go trade options. I will do sell and put. And 4 days out, I will select a stock price here that I'm willing to purchase this ETF at or stock at. So for $24 strike price, I will be making $20 or 20 cents per share. And in one contract or in one options contract, you get 100 shares. So that's 20 cents times 100. So I will be making, or if I do here, for example, I will be collecting a credit of $19.96 because 4 cents is the regulatory fees. But other than that, I'm collecting roughly $20 for saying that I will buy on 18th July. I will buy SOXL at the price of $24. Currently, it is at $26. So not only I am saving $2.50 here, I'm not buying at today's price, but also I'm collecting some $20 here as well. So then my break-even price would be, or my cost price would be $23.80. So that is one way of selling cash secured put. So what I do with this is here I'm selling 12 contracts at $22 strike price. So $22 strike price is more likely to be executed than $17.50. So with my margin money, what I do is I sell cash secured puts that are highly unlikely to happen. Meaning, of course, I will be given very less premium for that. So I got 2 cents per contract premium, meaning for 45 contracts, I only made $90, whereas for just 12 contracts here, I made close to $190. So if you see here, so I made 15 cents per share for 1200 shares. So that comes out roughly to $181, right? So I got $181 from 1200 shares, but these are the shares that I am putting in the money, meaning I am putting my own money to buy these 1200 shares. That's why I'm being little aggressive here. But for margin, I'm trying to avoid execution. So that is why I selected a price that I'm very confident that that's not gonna hit. But then, of course, I'll make very little money. But if you think about the bigger picture, I made $181 here with these 12 contracts, and I made $90 here. So I totally made $270 with just $26,000 of my investment. And $26,000 is by doing the simple math of $22 per share for $1,200 is $26,400. On $26,400, along with the margin money, of course, I'm able to make $270, which is over 1% of the return, like a total return of 1% in a week, which is amazing because if you expand that over a year period, that's over 50% return on investment. And the probability of you getting executed for this is very low. So that is why it is important to use this margin money, not as aggressive as you would use your own money. So that is how I'm using this margin money in this account, and you can do the same if you want, but that's totally up to you. This is again not a financial advice or anything like that, but that's something that I really wanted to showcase and tell you guys how you can leverage bank's money, or in this case Robinhood's money, to generate some extra income on the side. So that's about it. Thank you guys for watching. I hope you guys like this video. If you have any question, please leave me a comment and I'll get back to you with the answer as soon as possible. Thank you so much, and I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.